Welcome to our Market Focus Report for Thursday, September 5, 2013. Let's go ahead and take a look at our calendar from today. We had an interest rate decision from Bank of Japan overnight. Bank of Japan decided to keep interest rates unchanged, and we heard some remarks from Bank of Japan Governor Kuroda. In a couple hours' time, we'll have an interest rate decision from the Bank of England, followed by one from the European Central Bank. Both central banks are expected to keep policy unchanged, and the markets are awaiting any additional forward guidance from both of them. In the U.S. session, we'll have our standard weekly initial jobless claims numbers, and then we'll have some Fed speak on the calendar as well, followed by U.S. factory orders. Of course, tomorrow we have our non-farm payrolls report for the U.S., and this will be closely watched for any clues regarding the Fed taper later this month. Let's go ahead today and start with our metals and our crude oil outlook. We can see that gold here on this daily chart is marginally higher on the day and is trading right around the 1392 level. Yesterday's price action was very significant. Gold sold off quite significantly. On our silver chart here, you can see silver is largely unchanged and is circling this 2350 level. Also, the move lower yesterday in silver was quite significant. It's a different story altogether on the crude oil complex, where we have stronger Brent futures today, trading right around the 114 level. The oil markets continue to take their cues from action in Syria. Today, President Obama and the other G20 members are meeting in St. Petersburg, Russia, and the markets are waiting to see if there will be any rhetoric or tension between Russian President Putin and U.S. President Obama. Yesterday, the Senate's Foreign Relations Committee in the U.S. decided to give Obama approval to conduct military action for 60 to 90 days against Syria chemical weapons facilities. Finally, we can take a look at West Texas Intermediate futures. They're also higher here on the day, and they're circling the 107.50 level. Let's go ahead and take a look at some FX rates today and see what's happening. We can see here on the US dollar daily activity index, the dollar is trading higher today against major currency pairs. The euro, which has been below this boom or bust blue line since August 23rd, is also improving here on an intraday basis. Japanese yen is right around the blue zero line here, which means there's not much of a trend here intraday for the Japanese yen. British pound, which has outperformed major currency pairs partners recently, is also stronger today. You can see the Swiss franc remains pressured against other currencies, as indicated by its position below this blue horizontal line. The Australian dollar is weaker against other currencies. You can see the Canadian dollar, which was one of the weakest currencies in the month of August, has picked up here on this daily activity index and is stronger against many other currencies. Much like the Australian dollar, the New Zealand dollar is relatively weak today against other currencies. So, taking some of these currencies into account, let's go ahead and take a look at some of the majors and cross rates that we are focusing on today. We start off with the British pound against the Swiss franc. This is a daily chart of that cross, and we can see in recent days the pound has really moved higher from this 142 level all the way up to this 146 level. In a recent report, we spotlighted an upside target of 146.88, and we can see today that our intraday high was just about 10 pips below this level. We also crossed a major yellow downtrend line here, as indicated by this yellow downtrend, yesterday and today. And if we extend our retracement levels a little bit more, we would target this 147.20 level as a next upside target for this cross rate. So again, the British pound has been very strong against the Swiss franc here on this chart. Go ahead and take a look at the New Zealand dollar against the Japanese yen next. We can see the New Zealand dollar has been moving higher in recent sessions against the Japanese yen. Using some Fibonacci retracement, we identified the 79.01 level as a major upside target. And in fact today, the market came within 10 pips of testing this level again and then came off. We can see yesterday, however, as indicated by this blue down arrow, the cross rate exactly tested this level and then moved lower. This was a very significant technical clue that we should all be paying attention to. On the downside here, we would expect the Kiwi yen cross to test 78.08 and maybe down to 77.51. Going ahead and taking a look at the euro dollar chart here, our main major currency pair, we can see on this chart that the euro has tested this 38.2% retracement level that is actually an extension area. A move lower from here, we would expect the euro to test this major 38.2% retracement line from the move 127 all the way up to 135 here. On the downside, we would expect further targeting of the 131.50 level, and if we break that level, this major 50% support line comes in at 131.02 for the euro against the dollar. This is a chart, a daily chart of the Australian dollar Swiss franc cross rate. We can see the intraday low here exactly corresponds to a major 50% retracement level for a recent range. We indicate that with our blue up arrow. The intraday high was a little bit above a 23.6% retracement extension zone. This represented a free 32 pips of profit for anybody who played this technical range based on Fibonacci retracement analysis. If this cross rate continues to move higher, we would anticipate a test of the 86.60 level, which is this red trend line, followed by a test of the 87.31 target area up here. Finally, we come back to the euro-Canadian dollar cross rate on this daily chart. We can see today's price activity, as indicated by this blue down arrow. The euro tested this 138.58 level, which is a 38.2% retracement level of this range that we see here. It then moved below this 138.24 level, which is a key Fibonacci extension area, and a continued weakness, we would expect a test of the 137.75 area, followed by the 137.30 level. Thank you very much for tuning in to our Market Focus report for today.